This podcast is brought to you by Independent Building Advice. IBA acknowledges traditional owners of the land and waters this podcast is recorded on. If you find this episode helpful, follow us for more so we can continue putting out free value for all homeowners in Australia. It really goes a long way. Enjoy the episode.
Today we've got a different topic. We're talking about commercial real estate or commercial property in lieu of or instead of residential property. And we've got a property expert with us with 3 degrees, great company, great business. We've got Jevan. Welcome aboard.
Thank you, Ben. Thank you for having me.
Yeah, awesome. Tell us a bit about you. Tell us a bit about your background so the people at home know what you're about, and we can go from there.
Yeah, sure. How far back do you want me to go, Ben?
Well, you can start from when you're 13, 14, you started your first business if you like. No,
Yes.
just an overview.
No, well, I've been in Australia for just over 7 years now, Ben. So I originally from the UK. I was born and bred there. My father was also born there, so second generation born in the UK.
You got a beautiful UK accent there. So
Yes,
it's nice,
yeah. You could probably pick it up from the accent, yeah. But been in Perth for 7.5 years, really enjoy it. What brought me to Perth was my wife, actually. So my wife has a lot of extended family in the UK, and we just had a bit of a chance meeting in the UK, and she dragged me over here 10,500 miles away, or however far it is. So had no inclination to move outside of the UK. But
had you been here before?
I hadn't. I've been lucky enough to travel quite a bit in my time, but never got as far as Australia. I kind of went as far as the Far East of sort of Hong Kong, China, but never ventured that little bit further into Australia. And it wasn't even on my radar, to be honest.
Well, we're quite isolated, so you know,
yes, that brought me here 7.5 years ago, and loving it. Really love Australia.
And just Perth, or you went to Sydney, Melbourne first?
I've only visited Sydney, Melbourne, but yeah, it was Perth. My wife was living in Perth, so that was the only place I visited before sort of doing a little bit of travel.
Yeah.
Only Sydney. Sydney, I was a little bit underwhelmed. It was oversold to me, and it was just like being in London.
Yeah.
So, but I really love Perth. I like I think being isolated has its downsides, but also that's what gives it its character, I feel.
It's like I find it like a small town sort of vibe, but obviously I think it's 2.5 million people here now, so it's not really a small town, but sort of got that, friendly, know your neighbours sort of vibe to it.
Yes, definitely. I've learned there's 2 degrees of separation for everyone, so that's interesting, because in the UK, obviously you got 65, 70 million people. You very rarely run into people that you know, so that's quite an interesting thing.
It's crazy, and it just still blows my mind when you meet someone and they know this person knows this person, and you realise you're relatives, and then you find out it's actually your sister. Oh my God, no, joking. But it's crazy, that separation part, and that's why I think makes the Perth fairly friendly, because you don't know who knows who, so you got to watch out for that. And now you've got an extensive history in property, so you've got 3 degrees. Walk us through that, and your business, Mortar and Soul. So
I would say my property life, in terms of when it really got serious, was when I was around 17, 18.
Yep.
And I actually decided to start my own real estate agency, and also.
At 17?
Yes.
Wow.
And also my further education was pretty much real estate based. So I've got an undergraduate degree in real estate, a Bachelor of Science in real estate, and a master's degree in property development.
Yeah, wow.
And then, kind of related, I decided to do a graduate diploma in law as well. So more my interest was commercial law and property law.
Yeah.
But it was actually a full law degree where I did criminal, I did tort, and all sorts of law. Yeah. So really enjoyed the law. And
that property, you just stay with the property side of it.
Yeah. It was more of a utility, really, because more so with the commercial side of real estate, you're pretty much a lawyer day to day, because you're interpreting leases, you're drafting leases. So a lot of the work is actually legal work, although we're not, legally qualified. Yeah. But that is most of the work that we're doing is legal work. So.
Yeah, and the fine print's the important part,
Exactly right.
Yeah, absolutely. Yeah. So getting onto your commercial, so obviously you've gravitated to the commercial side of property. what to people at home, because I think most people who are listening are more into the residential and no residential, and I think a big part of Australia is you buy a property. The Australian dream is you own your own home. Can you give us a bit of an insight as to differences toward getting into commercial real estate versus getting into residential real estate?
Sure, definitely. I think the main thing that I always try to explain to people is that, particularly on the investment side, so not really the owner-occ, because there's different, so owner-occupier side, you've got more emotive sort of purpose and reasoning behind purchasing the property. Whereas on the investment side, I think it's very important that investors understand that residential property and commercial property are two very different asset classes.
Okay.
So quite often you'll have investors that have a diversified portfolio. So they've got maybe stocks and shares, they've got Forex or whatever it may be, crypto, and then they look at property. I always try to separate. You've got residential property and you've got commercial property. So people will say, should I be buying residential? Should I be buying commercial? Shall I, purely do one or the other? And I say you've got to look at it as any other type of investment. It's a different asset class. So it could form part of a wider portfolio where you've got a bit of resi and you've got a bit of commercial. Yeah,
diversify, yeah.
Because they're two very different worlds and they're two very different asset classes. So, and what makes them different is various factors. It could be, I'll give you one example with sort of what I found in experience is that people will often drift to residential because it's what they know.
Yeah, absolutely.
They've bought a property or, they feel they know it and they can relate to it. So it's like, okay, well, we'll buy, an investment property and we'll let it out and, we start from there. So it's a natural progression to home ownership and you got some really, I would call them smart people, maybe rent investors where they've jumped straight in and they bought an investment property before they've even bought their own owner-occupier property, which is, you could argue it's a great move. So I feel it's a natural progression. And then also commercial naturally progresses from there where, people have maybe bought 1, 2, 3, or they've got a portfolio of residential properties and they say, well, where to from here?
Yeah.
And I think commercial is that natural, it's the next step, it's the evolution.
Yeah, just on that, I think people, I think if there's grey area, people run away from it. Like they go, well, I don't understand it, so I don't, like I said, I bought a house before, I know that process.
Yeah.
So if I'm buying investment property, it's just a slight variation from owning my own property, whereas commercial can be completely foreign.
Yes.
But do you find that the commercial property market might be booming and the residential might not be, or vice versa, or do they normally go hand in hand? Or
from my experience, Bain, I would say commercial doesn't really have these sort of boom and bust kind of cycles.
Yeah.
It's more stable. It's more strategic. Residential investors can sort of benefit, or even obviously it can be detrimental when you're following these boom and bust cycles. If they buy at the right time, they get these really good capital growths like we've seen in the last few years in Perth, whereas you don't really get these massive jumps in commercial, because the value of commercial real estate is very much driven by the rental yield that it's achieving. So it's linked to the income that it's producing. So you actually treat it more so like a business.
Gotcha.
And that's why you don't get these massive peaks and troughs, because it is a business in effect. Every commercial property you buy as an investment is its own kind of business entity.
Yeah.
And what I would sort of compare in the sense of what we've seen now in the residential market over the last few years, you can actually create that yourself within a commercial property. So how you create that is if you buy an underperforming commercial asset, it's achieving $20,000 a year in rent or something, and it's not being given the love.
Yeah.
And you come in, you purchase that asset at the value that it is today. You give it the love. You do a bit of strategic thinking around it, and you can increase that rental yield.
Yeah.
Overnight, if you've changed that value of rent from 20,000 to 40,000 by changing the tenant, making some improvements to the property, you've also doubled the value of the asset overnight.
Yeah, you got dependable income as well as something that's got more value.
Yeah, because it's linked to the capitalization rate of the rent.
Yeah.
So if you double the rent overnight, which is not, it's not hard in the sense, if you've got a strategy behind it. If you know what you're doing and you've purchased that asset with a strategy in mind, and you know that that's what you're going to do as soon as you buy the asset, you can double the value of that asset overnight. Yeah.
Now you're talking, just to be specific here, you're talking about the actual building. You're not talking about the actual business part of it.
Well,
or you're talking about
both. Because obviously the business part of it, if you've increased the revenue of a business, you've increased the value.
Absolutely.
So it's the same as a commercial property. If you've increased the rental yield, you've increased the value.
So what I'm saying is that you're talking about, just so I'm clear for people at home as well, is that so if you're talking about buying that building and also the business with it, or actually who your tenant's going to be.
So obviously, when I say business,
that's what I'm just trying to get clear.
I'll clarify that. Yeah. So when I say treat the property as a business, it doesn't matter whether there's a business operating from it, which is XYZ Pty Limited.
Yeah.
Obviously, that's a separate thing. That's your tenant.
Yeah.
So what they're doing is completely separate, but treating the asset as a business for yourself, as in, I want to derive an income from that asset, which is rent. That's what I mean.
Yes, I figured that. I just want to make sure. So what are some of the things people could do? For example, like painting a new color, or freshening it up, or trying to attract a different business there. So obviously, if you're in a industrial area, maybe having a bridal shop might not be the best shop to have in that industrial area, but you could have like a local deli, and that could do really well because there's no other local delis. Is that sort of what you mean? Try to get the right people in there?
Changing the use, changing the tenant is definitely a widely used strategy to sort of get those capital growth gains. I'll give you a real world example. We had a client, and they had a retail unit, and inside was a florist.
Yeah.
So that florist, it's probably a little bit of a dying industry, unfortunately. You've got your peak seasons, your Valentine's Days, your Mother's Days, and things like that. But the rest of the year, I think it's just one of those industries that's been hit hard, because you can go to Woolworths and there's a lot of competition.
Yeah.
And if you can spend half the amount on the same product, you're kind of silly not to.
Yeah.
So what we did for that owner is we actually came up with a strategy where we said, look, if you purchase this asset, you're getting X amount of rent, but we think that you can achieve a lot more by removing that tenant, putting in another tenant, which is going to pay a much higher rent. So what happened, we executed that plan. We asked the florist, we actually helped them find another location. So we didn't just say,
you're out on the street.
We obviously try to do the right thing.
Yeah.
So they weren't actually making any money from being in that premises.
Probably in their best interest. Yeah.
And their occupancy cost was nearly 30 or 40% of their turnover. So that means that's really high. So to put that in perspective, if you're in retail, you want to be around the 10% on average.
Yeah.
Some industries require 5, some maybe 15, but on an average, you want to be around 10%, and they were at 30. So that was really digging into their profits and digging into their sort of their income.
Well, eventually they would have moved out.
Eventually they would have moved out, or they would have gone bust.
Yeah. Either way, they're moving out.
It was not we kind of just opened their eyes to that fact and said, look, this is probably not the right place for you. And we went and put a real estate agency in there. Now, the rent for them is 1 commission.
Yeah.
Whereas for the florist, it was like, we've got to,
5,000 plants.
We've got to scrape the barrel to try and pay this rent every month.
Yeah.
So they were actually paying 40% more rent, and they were happy with it.
Yeah.
They were like, oh, that's fantastic. That's a great
worthwhile.
deal.
Yeah.
So automatically, that property value, by getting that 40% extra rent, the value has also gone up by 40% of that asset.
Yeah, wow.
So that's the strategic thinking behind it, is actually. And they have not done a single thing to the property.
Yeah.
They haven't painted, they haven't put in different fixtures and fittings or anything. Literally, by changing the tenant and creating a new lease, they've increased the value of the property by 40%.
I dare say also that you as a third person in this arrangement, looking at it through your lens, will probably see opportunities that others wouldn't. I mean, we're looking at renovating our home at the moment. I design homes all day long for people. And go look at design something fairly quickly.
Sure.
So I've been doing it for 25 years. Comes from my own home. My wife and I are like trying to work out how to do it. And sometimes you just need that third party, but you're looking at it from a holistic point of view. Those florists are living there, day in, day out, just doing their daily life. And then you've knocked on the door and go, guys, is this the right fit for you? Maybe not. Let's look at other options. They go, actually, you put that on the table because you're seeing it through, you're taking a macro view of it. Whereas the owners are also probably doing the same thing. And you go, actually, this is actually a better fit. And sometimes you need that third party to look at it and go, okay, let us see what's in your best interest. And this might be the right business in the right place or the wrong business in the wrong place.
Sure, definitely.
Yeah.
I mean, just like you say, if you showed me a set of plans for a house, I wouldn't know, is that wall in the right place? Does this flow right? That's your expertise because you've done it for so long. I've been in commercial real estate for 18 years. So it kind of, and it's just knowledge and experience and training. And because I've been doing it day in, day out, I can take a step back, look at a helicopter view, and I can very quickly in my mind do some jigsaw puzzles and say, well, you make this move here, you make that move there, and it's like Monopoly in your head. But it's just down to experience. I've been in the industry for 18 years, so it's I've got no superpower. It's just that's
rubber on the road.
It's just practice. It's just practice.
But it must be very rewarding at the same time to go move. Wow, the clients, that property is killing it now, and you're going, I'm still got it. It must be rewarding to see these businesses turn around.
Yeah, and it's quite satisfying, but it's also that strategic thinking is what floats my boat. That's what kind of keeps me really interested in commercial real estate, and that's coming back to one of your questions: is what's the difference between residential and commercial? I feel commercial, when you're doing a deal, whether it's leasing or a sales, potentially not so much, but particularly in leasing strategy, every case is different and every case is unique.
Yep.
Whereas in residential, I mean, yes, you've got experts in your field, but whether you're leasing a property in Dalkeith for $1,500 a week or whether it's in Armadale for $550 a week, it's exactly the same process. And it's the same system, it's the same documentation, it's exactly the same. Commercial, you've got every lease is different. Every negotiation is different and every circumstance behind the purpose of the deal is different. And that's what really excites me is that you do have to think about it. You can't just say, well, there's a form off the internet. Cut and paste and there you go, that's the process. Every deal is wildly different.
Yeah, it's interesting. I'll tell you my experience though, because when we're looking for this office, we just found it incredibly frustrating where you go to find out what a lease is to lease it. And went to all these different places and we found one guy eventually who was actually quite helpful. But every time you go, okay, what does it cost me to lease this place? And they go, it's going to cost you $5,000 a month or whatever it might be. You go, okay, great. All right, is that all the costs? Oh, no. You've also got to pay for car parking. Okay, is that all the costs? Oh, no. You've got all this outgoings as well. So, okay, how much in total is it going to cost us? Because, it's going to be 25% more than that or whatever it might be, or normally double. And you're there going, okay, well, thanks for telling us. And we had one that we actually put an offer in and we filled out the lease form. And I said, what's the outgoings on top of that? And he goes, it's roughly this. And he gave me this figure and we didn't have anything in writing. We're just going back and forth by email to what we're agreeing to because the house, it was actually an old house that we're going to use.
Yeah.
And in the end, when we finally got the document through, it was all his outgoings, which was like another $5,000 a month over above than what we talked about. He goes, I made a mistake. This is the real figure. I'm going, mate, well, the deal's dead. Like, he goes, go on, you can make the extra 5,000. I go, no, we're not. What are you talking about? Like, it was just so difficult. Whereas if you're trying to lease a place, you want to know what all the numbers are. And I just find people like yourself who are really good at what you do, being proactive, you win half the business out there anyway by when people give you half information, we go, well, I need to know what my overheads are so I can actually see if I can afford it. It's just, I found it's a really interesting process.
No, I feel that comes down to, again, a little bit of knowledge and experience because
absolutely,
outgoings is one of those things which on all different levels, agents, landlords, tenants, they don't grasp the prospect fully, and they don't understand the process fully, and that again comes down to potentially their own knowledge, training, experience, and everything like that, because that can be a real pitfall. So coming to maybe what should you look out for in commercial, and what could be the dangers? I'll give you another example. I won't sort of mention specifics, but we had a client that purchased an asset, and they were looking at, what rental is it achieving, what's the tenant like, and everything like that. They didn't even look at the VOs, and the variable outgoings can be such a big factor in how that asset performs, because a landlord can sometimes forget, I don't need to pay those, because that's going to be the tenant's responsibility. But like you say, the tenant just wants to know, how much am I paying?
Yeah.
How much is it per
Can I
month?
afford it? Yeah.
So they don't differentiate what's my base rent and what's my variable outgoings. They say, how much is coming out of my bank account every month?
Yep.
And if a landlord disregards the variable outgoings, they don't realise that, yes, the tenant is paying for it, but they don't care whether it's outgoings, whether it's rent, whatever it is, it's an expense. It's coming out of the bank.
I can afford $5,000 a month.
Yes.
Can I afford this?
Exactly
That's
right.
what I'm thinking, yeah.
So they might say, well, the rent is really attractive, it's $20,000. But also your outgoings are $18,000.
Yeah.
And it's like, well, that's a lot of money.
Yeah.
So when you're buying an asset, you have to really hone in on the variable outgoings, because you can get, and you would know in the construction industry, if a property's been poorly constructed, or if it hasn't been constructed in a very logical way, that can affect your outgoings. So the higher your outgoings, the less attractive that property is to a potential tenant.
Yep.
Because they don't distinguish between the two.
Yep.
It's coming out of the bank.
And you lose trust immediately when I go,
Exactly
okay, what are the hidden costs? Oh, it's all this. Well, are there any? Oh, yeah, there's also car parking bays. Just give it to me straight, and then I know, and then go, okay, I trust you now. That's cool. I feel comfortable with these numbers.
Exactly right. And outgoings are one of those things where they are heavily linked to, inflation, CPI. So they are going to be on an upward trend.
Yep.
And quite quickly they can get out of control.
Yep.
So if you've got really high outgoings for a commercial property, it becomes a lot less attractive to potential tenants.
Yep.
So that's a big factor that you need to work into your strategy.
If people are actually going to get into commercial real estate, obviously it's different to residential. How do you get into it? Like, let's say I've got 2 investment properties. I'm doing fairly well. I want to diversify. I do want to get into commercial real estate. What do people need to know what's the entryway into that?
I think sometimes from experience, people and investors are maybe a little bit put off because they don't know too much about it. And I think the expectation is that the entry point is going to be a lot higher and maybe unattainable than what is actually in reality. People have millions of dollars in their head. It's like, well, I can't consider commercial. I don't have enough capital. I don't have enough borrowing capacity. But you can actually get started in commercial a little bit lower than what you might think in terms of a capital outlay. You can pick up assets from $500,000-$600,000, which some people think, wow, that's quite low to what they think. It's obviously it's still a lot of money.
Trying to get a house for that these days.
Exactly right. Yeah. So yes, you're not going to be sort of looking in certain markets and industries because it's going to limit your search. So you might be looking at a small, light industrial unit or something, a lock-up or...
Yeah, it's not going to get you the Cottesloe Hotel.
Exactly right. Yeah. Exactly right. But where you can actually then snowball and gain is by having these strategies in place. Because when you purchase that asset, for example, for $600,000, and you have a clear strategy in place where you say, well, I want to now really get every bit of return on investment from that property. You have a strategy, you move some jigsaw pieces around with the right advice and guidance. You can all of a sudden have a property that has increased in value by a couple of $100,000 by making some simple changes to leases or, adding some other value, which creates an additional revenue stream. And all of a sudden you're sitting on $200,000 worth of equity within a year that you could potentially draw out, leverage and buy another asset.
That regular income is a beautiful thing because and correct me if I'm wrong, the residential versus commercial strategy, residential, you get the rental income, but you're trying to get the equity and the growth.
Capital growth.
Whereas commercial is more of a long-term sort of game where you're actually trying to get the rental return. Is that correct?
And I feel that people use commercial property. You want to be positively cash flowed in a commercial property. The whole concept of negative gearing and is less. I feel less of a factor than when people purchase.
Positive gearing is definitely better than negative gearing.
Yeah. I mean, I always use the example. If you get an alien from Mars and you try to explain negative gearing to them, and you say, "Well, I'm going to invest in an asset with the view to actually make a loss," I think their head would explode. But that's just me. But
good thing that's not a problem right now. Yeah,
yes, exactly right. So, and I feel when investors accumulate wealth and they're getting these capital gains and they're looking at where do I invest, maybe they've got a lot of equity in residential property. I think you hit a ceiling in terms of what your return on investment is. And I'll give you an example. In residential, if you've got a $1 million property or a $2 million property and you're getting a rental income from that, whether it be $1,200 a week or whatever it may be, $1,000 a week. As soon as you start going higher and higher in asset value, your rental doesn't actually go up in line with that. So you could have a $2 million property that gets $1,000 a week, and you can have a $3 million property which also gets $1,000 a week. So you hit a ceiling in terms of what rental you can actually achieve for a certain value.
Yeah.
Whereas with commercial, the higher you go, the rental follows. So, if you've got $1 million property, you're getting X amount a week. You get a $2 million property and your rent has doubled as well.
Yeah.
So when you start getting into larger sums of money, it just makes more sense.
Yeah, gotcha.
Because your yield just keeps depreciating in residential as you go up in terms of value.
Yeah.
Whereas commercial, you buy a $20 million property, you're still getting a 5, 6, 7% yield from that.
Yeah.
Whether it's 20 million or whether it's 5 million.
Yeah.
So your return actually follows a parallel line on a graph.
And in turn allows you to buy more. And
exactly right.
Yeah.
So that's where you find that natural progression, because investors that have accumulated wealth in residential, they soon realise, hang on, I'm going up and up and up in value, but the rental is flatlining.
Yeah.
So, and that's when they start looking at commercial.
And like my favourite taco ad where she goes, let's, do we do flat or round? And goes, why don't we do both?
Yes.
Why not do both? And it makes a lot of sense. Like that diversity is great. If you understand residential, dip your toe into commercial, see how you go.
Yes.
And that makes a lot of sense to me. But as someone who's not in commercial and learning from you here, my fear would be that, obviously the internet these days, a lot of people are buying online, you got Amazon, brick and mortar being, your building is, I would be going, oh, do I want a retail store? Is that dead now? Like you're talking about the florist, you can buy it online, things like that. What are your thoughts on that with those kind of shops? And,
I think you've got to be agile, and for as long as there's been humans, there's been trends, there's been changings. It wasn't that long ago that everybody was going around on horse and carts, and then, Henry Ford came along and changed the story. So there's always going to be market changes and global changes. But I don't think there's going to be a case in my lifetime where bricks and mortar becomes obsolete. It's just you have to think outside of the box in terms of the use.
Yeah.
And I would say there's certain asset classes where you may want to avoid. I wouldn't recommend you buy an office suite in the CBD because you've got hundreds and hundreds of them, thousands if not. Whereas industrial property, for example, Ben, at the moment in WA, the vacancy rate for industrial space is 2.5%.
Yeah, crazy.
You can't get them.
So good. Yeah.
So and similar to the residential industry, they can't build them fast enough. People are buying these off the plan.
Yeah.
And you just have to follow market trends. You have to keep an eye out what's the population growth happening. So in WA, population is still on the rise, supply is still very low. So there's always going to be a user case, but you might have to be agile and adapt look at how the overall market is performing.
Yeah.
And yes, you might need to make some decisions where you say, well, this particular industry, if you've got a tenant in an industry and you can maybe with the right market data, the right guidance, and say, well, that industry is actually at risk at the moment, whether it be because of AI or because of online retail or whatever it may be.
Yeah.
You need to put a plan in place and say, well, when we renew these guys, maybe we just renew them for 24 months rather than giving them a 5-year option.
Yeah.
You know, and you kind of, again, think ahead.
Yeah.
And it's all about having the right strategy and sort of that helicopter view.
Yeah.
And I always plan, the minimum I plan for a property is 10 years.
Yeah.
That's the minimum.
Yeah.
You know, ideally you want to be looking further ahead than that.
Yeah.
So,
well, if you're making good yield, why sell it?
Exactly right. And within that plan, it might be, when I say 10 years, you might maybe transition to another property. You might say, you know, well, I'm going to hold this property for 2 years. I'm going to make that capital gain. I'm going to divest and I'm going to buy a different asset. So it's very much a strategy game.
Yep.
You can't just... I feel it's quite easy to get lucky in residential. Yep. You know, you buy a good property in a good location, you're kind of safe as houses.
Yep.
You're not going to make a massive gain. You're not going to make a massive loss. You've just, it's like putting the money in the bank.
Yeah, it's a blue chip share sort of thing. Yeah,
exactly right. Yeah. Whereas with commercial, you do have to be very strategic around it, and you need to make sure that you put safeguards in place, and it's very much a bigger picture and a long-term game.
But it's also, like you said, though, you got to look at it from a strategy like Monopoly, for example. Or Monopoly's probably not the best example, but I alluded to it earlier that you go to an industrial area where there's lots of workmen or workwomen or whichever, and they're working there, and you put a deli there where they can make lunches. Mate, those places must be cleaning up because... Yeah, you can Uber Eats and stuff like that, but most of these people just want to walk out of their factory where they're working or something like that and go get something to eat. Like that's, if you're the only one in the area, one of few, there's huge money in that. But if you're thinking, oh, we need another warehouse, well, obviously warehouse is doing really well, but if we need another shop here, thinking outside the box, what would be a good tenant for this? How can we rebrand this office for whatever it is? That to me is where I think it's great. Opportunity where you're going, well, like a real estate agency, well, you know what, there's not one in the area or not around, this is a great spot. They have to meet people. They have to have a presence, which is not going to go out of style anytime soon that I can see. But if I'm thinking about getting into commercial, or one of our listeners are, and obviously Mortar and Soul is what you do, this is what you live and breathe for the majority of your life.
Yes.
How do you guys help people? How do they get into this with you involved?
So we're we like to think, because we're boutique, we are an all under one roof kind of solution. We can help people select an asset, we can help people come up with a strategy, and then we kind of propose to them like a 10-year plan kind of thing. And whether they want to feel that 10 years is not enough, they want to plan 20 years, whatever. So we kind of adapt to what investors, or it could be owner-occupiers as well, because there's a lot of businesses out there that require commercial premises for their own business.
And you help them choose the right area.
Yes, because there's choosing to meet what your requirements are, and then there's also balancing that to say what's a good investment also, because if your business expands, you need to move on. You know, you don't want to be left with a very specialized asset that you can't do anything with it. So we want to make sure that they're keeping an investment mind on as well.
Well, I imagine some people might be better off leasing their own place and buying another commercial place, because that location might not fit their budget or work for them. They can depreciate that, or they can get the tax write-offs to that, but invest somewhere else as their own strategy.
Exactly right. And most, when you look at big business around the world, a lot of them will not purchase property because then their business is not property. Their business is whatever they're making, whether they're manufacturing,
Teslas or cars or
whatever they're doing, that's their core business. And quite often than not, with established larger businesses, that capital being put back into the business rather than being tied up in an asset is worth a lot more. So, and that's out of my realm a little bit. That's just coming from experience. We don't give any tax or legal advice or anything like that. So, but that's just from experience. We're also happy to say to people, look, have a chat with your accountant or your business coach or whoever it may be.
But if I come to you with X amount of money, how do I make more of this
Yes.
and you'd go, okay, with that amount, I would recommend this strategy.
Exactly right.
Yeah.
And sort of we can guide them on how the market's performing, which industries are doing well, whether it be retail or industrial or whatever it may be, we can guide them, because you're also going to sort of need a little bit of ongoing hand holding, because sometimes it can be daunting because, again, coming back to, it's not all flowers and rainbows with commercial. There's also a bigger flip side. I think that the disparity between risk and reward is also greater than residential, because residential is a bit of a known entity. Mm-hmm. If I say to a property manager and say, well, I've got a 3x2 in this area, they can instantly tell you, well, I'm going to get X amount per week and I'll have a queue of tenants at the home open. It'll be leased within a week. Yeah. With a commercial property, yes, you've got exceptions to the rule, but you could have a property there which is quite niche. It's maybe tailored to a certain industry. And if you've got a long-term tenant that has been there for 7 years and all of a sudden they've said, well, this is too small for us, we're giving notice, we're moving out, you need to build in a bit of a recovery plan if you've got a long-term vacancy there, because that could be vacant for 6 months. You don't get that in residential. I mean, especially in this market.
But that's where you help them factor that in and go, okay, let's look at all assets. So when they're talking to you, that you've got that 18 years of experience where they're going, okay, we're going to try and protect you as best we can and make you aware of the pros and cons. But at the same time, the market's really hot in Perth. That can change. And all of a sudden, I remember a lot of guys that used to work for me in the past, they had all these investment properties and they were hurting.
Yes.
They were hurting badly because they were just carrying all these homes and they weren't positively geared. It goes flips and roundabouts. But again, there's pros and cons with both. And it's just understanding the strategy behind that.
And that's where the effective property management comes in, Ben, because another thing of what we do and what we do well is actually we don't call ourselves property managers, we call ourselves asset managers. Yeah. Because there is a distinguishing kind of point between the two. A property manager is sitting there at the computer and they're saying, well, has the rent been paid? Have we issued statements to the landlord? They're ticking boxes and they're following a process.
Have we treated tenant like crap lately?
Exactly right. Whereas an asset manager is looking at that. They are looking at the day-to-day management and saying, is it on mission to what our strategy is and what our plan is? And I'll come back to that example. You've got a tenant, they've been there for 7 years and they've said, oh, we've outgrown it, we've got to move out. And the first you're hearing about it is when you've called them up and say, hey, you've got an option in 6 months, are you going to take it?
Yeah, you don't want surprises.
So asset management is liaising with that tenant, visiting that tenant and saying, how are you guys doing? How's the business doing? Are you guys growing? Are you struggling? Yeah. It's having that relationship with the tenant. Yeah. We would actually know before they know that they're going to outgrow that property.
Yeah, wow. And it's also less likely they're going to create a meth lab in your money. Ideally,
exactly. Well, obviously, you've got to have your finger on the pulse, because quite often than not, when we're dealing with managements, I will say to my team that company's not going to be there next year. Yeah. We need to actually start putting a process in place and conditioning the landlord and say, look, we need to be under the radar. Yeah. We need to have a few tenants lined up for that property, and more often than not, we're right. Yeah. Either they've gone bust or they've outgrown. So there's usually there's a positive reason or there's a negative reason.
And your clients have that confidence to go, okay. Yeah. Jevan's looking, Morton Soul's looking out for us.
Exactly right. And that's the difference between asset management and property management. Yeah. And the commercial industry at the moment, Bain, is I would say it's having a bit of a crisis with quality labour. It's because it is so niche and it is a very strategic kind of industry. There isn't that much quality workforce out there that I can recognise, in the sense that you can quite easily train somebody to be a residential property manager because it is all spelt out for you. Yeah. There's a process and there is a form for everything. Yeah. You go to REWA and there's a form for for leasing. There's a form for termination. There's a form for everything. Yeah. Whereas with commercial, it's a very different skill set. It's strategy. It's having a legal mind. It's having, negotiation skills.
Thinking outside the box of possibilities. Yeah.
So I would say the industry is a little bit underserved. So there's a lot of properties out there that aren't being effectively managed.
Yeah.
I'll give you a real life example that came across my desk yesterday. We've just taken over a management, and this has been leased since 2019. Mm-hmm. In the lease, you've got rent reviews. So it's a normal lease that you would see from a reputable law firm. Mm. But the property managers, out of how many years is that? So in 6 years, they did 1 rent review.
Oh, wow.
And they were supposed to do 5.
Oh.
So that's money out of the landlord's pocket. Yeah. And they've just trusted the landlord.
Set and forget.
Yeah. It's like, that's an asset. It's being managed. We don't need to worry about it. They put the rent up in the first year. So it was at, I'll give you some sort of round figures, but it was at $17,000 the rent when it started. It should be now at 24 with the rent reviews.
Wow.
The passing rent when we took over was $17,800.
That's crazy.
So that's money out of the landlord's pocket.
Yeah.
Because it just wasn't being managed properly.
Yeah, it's not ripping the person off. It's fair. It's market value.
It's not bad intent. And also it comes down to this labour issue.
Yeah.
Because what's happening in the commercial industry, Ben, businesses out there that are property managers, they're recruiting people from residential because they're desperate.
Yeah.
There isn't a supply of workforce out there.
Yeah.
And they're trying to entice people from residential. And you see the ads on seek.com and it's like, are you a residential property manager looking to upskill and whatever? And they're enticing them with an extra 10 grand a year.
Yeah.
They're bringing them in, they're drowning, and they're just, here's 100 properties to manage and just get on with it.
Good luck, yeah.
But they're doing it with a residential mindset, and they're doing it with the habits that they've accumulated in the residential industry. And it does not translate to commercial. And that's where these cracks are forming, where, rent reviews aren't being done, and there's things that are being charged to a landlord as capital expenses, which should be charged to a tenant for variable outgoings and vice versa. They're making a real mess of it. Yeah. And that's where the knowledge and experience comes.
And that's it. And it's having the right people on board. Yeah. But Jevan, we could talk about this all day, and we'll have to get you back on to talk about it more. We're going to ask you the big question that we ask everybody, but before I get into that, I just want to give you this hat we've created. You're the only one that's got it. You're guest number 28.
Fantastic.
So this is all yours, and I believe you like tennis. You were saying that earlier, so it could be something you play where you were tennis, or you just put it on your mantle if you like. And but yeah, the Homebuilding Podcast, our new hat that we've created, and Riley's was behind it all, so it's great. So
thank you, man. Now I will wear that on Saturday when I go for tennis.
Beautiful, mate. And then people go, "Oh, are you on the Homebuilding Podcast? You must be amazing." So,
well, I'm going to be a celebrity now.
Well, there you are. Hopefully, get used to your signature when you sign things. Yeah. But we're going to ask you the $10,000 question, and that is that you're building or renovating your own home. You can even chuck in a commercial place if you like, and you got $10,000 that's been gifted to you, but you have to spend it on your home. What would you spend it on?
Well, apart from a retainer for you, but, what would I spend? I would like to have a bit of a man cave. That's the aspiration. So
what would you have in that man cave?
I would have a snooker table. Potentially also a pool table, if I can, Ben.
Wow.
Again, it's two different. One's a bit more of a serious, one's a bit more of a casual. Yeah. You got to have a bit of a home theatre kind of setup going on. And I think, that'll be nice.
One of my favourite designs we've done is what we call a great room. Yes. And that is, it's actually a theatre room, games room combined, like you've done there. So you got like the theatre room section there where you can watch TV, and it opens up to a bigger room, and you got the snooker table, a pool table. I haven't had anyone tell me before about a snooker table and a pool table, so I love that. Yes. But you got this big room, so you actually divide it off, or you can actually open it right up. So if you're watching a movie and playing a bit of pool or watching a bit of sport, I love that idea. That's great. Yep. That may not fit 10 grand. But I do like it though. But thank you very much for coming on. You're a wealth of knowledge. I've learned a lot today myself, because my knowledge in the commercial world isn't that great. No residential back to front, but we'll have to get you back on again in the future if you can.
Yep, would love to. Thank you, Ben.
Thanks, Jevan. Appreciate it.